Good evening, folks. Quite a number of people joining. Good evening. I would love it if you guys would start asking me questions so that I can see what I can answer and what I cannot answer. Tonight's going to be basically the same. Tonight I'm going to try and answer questions. There's nothing specific that I want to talk about. I just thought I'd go onto a live TikTok, get a few questions, answer people, see if I can educate people a bit. So go for it. Anybody that wishes to put anything in. And this is my first time, so you're going to have to be patient with me. I'm not sure how and where people pop up to talk to you or write. Let's see what it says here. Interact. That won't help. And so it is that this is, like I said, the first time I'm trying this. And for the first time trying something, not really sure what I am doing and what I'm not doing. Well, good evening to you, young man. Seeing that I'm being called Oom. Sometimes I feel so old when people call me Oom, but I feel I'm very young still. Erasmus, Rafan, good evening folks, good evening. Hallo David, is daar iets waarmee ek vir jou kan help meneer? Mkunzi, good evening. JMF, yes, JMF, jy moet my miskien hier so help zwaar. Dit is die eerste keer dat ek hierdie goeders doen en ek is nie seker hoe en waar ek moet sien of iemand met my praat of my vraag vra nie. Hallo Pieter, hoe gaan dit vanaand? Baie dankie Erik, ek waardeer daai comment. Jimmy, there we go. First question, can I take 550k and give my wife 550k with no tax? So Jimmy, are you talking about your retirement annuity pension fund and provident fund? The quick answer is no. Every individual has that 550k tax-free portion at retirement. And then after that, it becomes 220,000 Rand. It's taxed at 18%. The next, how much is it? The next amount is 485,000 Rand, which is taxed at 31%. So you could get that in your individual capacity, Jimmy, and your wife could get it in her individual capacity, but you can't add her and give her an extra 550. The one thing that's interesting, Jimmy, and this is something that people don't know, is donations tax. If you give anybody a gift, it doesn't matter whether it's cash, whether it's a car, whether it's a house, whatever the case might be. You give anybody a gift that is more than 100,000 Rand. You, the person giving the gift, is going to pay 20% donation tax on the amount that is higher than 100,000 Rand. The only time that anybody is exempted from donations tax is if there is a gift between husband and wife. That is the only time when donations tax does not come into the equation. So you might not be able to give a 550k out of your pension fund tax-free, but you can definitely give a 550,000 Rand out of your bank account if you have it, Jimmy. I hope that answers the question, mate. Let's see, what else is happening here? Like I say, people are joining and I can see things are happening. I'm just not 100% sure if I'm reading everything right. Erik, baie dankie. Ek sien jy sê so, jy luister altyd baie mooi wat ek sê en beloof jy leer so baie van my af. Baie dankie. Ek is bly as mense leer want dit is die intensie met wat ek doen, is om vir mense guidance te gee. Is it advisable to withdraw your two-pot if you have 2 years of service and you are below 30 years old? No. Mkunzi, the short answer is no. It is never a good idea to withdraw from your two-pot system because you are losing out on money that you should be using at retirement. you're paying tax, and it's substantial tax because it's withdrawal tax, number one. And number two, you're losing out on the compound growth, the growth on growth on growth that you would have earned on that money. So my honest opinion is there's very, very, very few, and I mean like in infinitesimally small amount of times when a withdrawal is worth is worth the tax that you're going to pay, so to speak, on the two-pot system. So preferably don't do it, keep it, you're just going to hurt yourself. If I've maxed out my TFSA, retirement contributions and 18A donations, what next? Okay, Farad, well, if you have done all of that, then it means that you've got money to spend, and then you can save extra money. So the next investment that you will then do is you will do a life investment, as they call it, or in the old days it was called an endowment policy. You're getting the tax free on the TFSA and on the retirement contributions, plus the rebates that you're getting there, donations. And then on your life investment that you do, once you invest the money there, you get growth on growth again, and there is a certain portion of the growth in the investment that is taxable, but it's taxed at company tax rate of 27%, which means that you, if you've been able to do all of that, is definitely earning more than 27%, or is definitely paying more than 27% in tax. So by investing it into this life investment, getting the growth and only paying on that small portion of growth, 27% in the fund, and you don't feel it because the portfolio manager is doing the payment for you to SARS. So you won't even feel it. So that will be your next investment that you go to in terms of getting the best tax efficient investments. But then there's other investments, and listen, yeah, I'm talking always about insurance products because I'm a financial advisor and we deal with the financial products that we have at our disposal. But there are alternative investments that you can try and do. And some alternative investments, such as arbitrage, are shown. And please, arbitrage is definitely not guaranteed, etc., but it is at this stage a working investment where one can get substantial growth. I've seen growth of 25%, I've seen growth of 45% per annum. And my personal opinion is, even if you take the tax into consideration into an investment such as that, you are still going to get a substantial return on your investment after tax. I mean, even at a 41% tax rate, if you've had a, let's call it 30% growth on your investment, even at the 41% tax rate, and if we take it on a straight line, you are paying 14% of that 30% in taxes and 16% you're getting in your personal capacity. And this is a straight line calculation. It's not a correct calculation. I'm just mentioning it as an alternative. Okay, so there you go. What about things like ETFs? There's nothing wrong with ETFs. I'm just not personally a big fan of ETFs because ETFs is not an actively managed fund. ETFs is a passively managed fund. And there's nothing wrong with it. It is just my experience from what I've seen over the years, that an actively managed fund normally outperform ETFs substantially. So there is a place for it in the market. There's definitely people that want to do things like that. For me, it's just not a very viable option when I give advice. Ek is hier om te hoor, te voel oor 200 daily moving average, sover het ek 31% groei van hoor, hoe voel jy oor die 200 daily moving average? Sorry, skies toch man. De wet, dis een van die goeders wat ek nie regtig baie na kyk nie, so ek kan nie regtig waar vir jou 'n ordentlike opinie gee omtrent dit nie. Ek sal bietjie moet gaan kyk en meer verstaan daaromtrent. Maar omdat daai tipe van ding nie iets is wat ons gebruik in die produkte wat ons gewoonlik aan kliënte bemark nie, is dit nie iets wat ek op 'n permanente basis opcheck nie. Ek sal 'n bietjie gaan kyk daarna en hopelik volgende keer as ons hierdie ding doen, dan kan ek vir jou beter antwoord gee en vir jou my opinie gee omtrent dit. Maar op hierdie stadium het ek nie regtig 'n opinie nie. Ek sit sommer hier op my nota sodat ek dit kan gaan uitcheck en dan kan terugkom op een of ander tyd. Retirement at 55, will there be any penalties? No, Eric, there won't be. The fact of the matter is that once you are 55 years old and one day you can go on to retirement from a pension fund, provident fund, retirement annuity, doesn't matter, you can exercise your options. The only time there will be penalties is maybe if you have a retirement annuity with a fixed date where you chose a retirement date at the age of 65. So the insurer then sees the fact that you are taking retirement at 55 and not at 65. Those 10 years they see as a breach of contract. And they could therefore say, okay, well, we would have earned 10 Rand in administration fees and 15 Rand in management fees, and we're going to penalize you with that. So there might be a small penalty with regards to taking the money out of the retirement annuity early. But the one thing I can tell you, this penalty has substantially decreased over the years. And what I mean with it has substantially decreased over the years, when I came into the industry in the late 80s, early 90s, at that stage they worked out the total cost of an investment over a period of time. And let's say it was 10,000 Rand over 10 years. They would have said, okay, this is the cost. If you cancelled in year 5, they said, okay, we've only received half of the money because it's been half the time, and they would penalize you with the full 5,000 Rand. Since the FSCA has come into play, they said, no, this is not good. We are penalizing clients, this can't do. So work on a sliding scale, work your cost out differently. And these days, especially on your new generation products, and when I say a new generation products, I mean a product that has been updated and upgraded lately, the penalties are substantially less. You can, for example, these days take out a retirement annuity up to the age of 65 as an example, and you can do it on the different companies have got different names, but you can do it in a retirement annuity where they offer you bonuses. So the longer you stay, you don't only get the growth that you get in the fund, but you also get bonuses in that fund. And in some instances, the company says, okay, there's no reduction in fees. And what that means is if you've chosen a 25-year term and now you decide to make that product paid up after year 10, then because they say no reduction in fees, it means that we are not going to penalize you with any cost because you're not paying us for the next 15 years. We are just going to accept that you've made it paid up, and that's the end of the story. So, no penalties, but do proper planning as to what you're going to do with that money. How you're going to take it, what you're going to need as an income, etc, etc. De Wet, dis net 'n plesier, maat. Dis net 'n plesier. Sheila. Oh, thank you, JMF. Thank you very much, sir. Het ek net hier so sien. Daar so 'n paar mense daar opkom en daar's dit. Okay. Ek dink ek het net een gemis. Ek wil net gou iets hier so kyk. Miskien daai wat it is just next. Yeah, Charles just got one there. No, can I? So there we go. Charles, I almost missed yours. Can I invest a once-off amount on an RA without contributing monthly, and will it be beneficial? Yes, Charles, you can. And I'm very glad you asked this question. The reason why I'm very glad you asked this question is retirement annuities, you can make contributions monthly, quarterly, half-yearly, yearly. So you can choose to have an ongoing payment. You can also choose to make lump sum injections or single premium retirement annuity contributions. So there's a number of ways that you can actually contribute towards a retirement annuity. Here's the wonderful thing about a retirement annuity, and if you're going to do something like this, up to 27.5% of your gross income can be contributed towards a retirement annuity, and you will then get the tax deductibility on that 27.5%. Up to the maximum of 350,000 Rand. So what this means is the following. Let's say that you've contributed 100,000 Rand to your retirement annuity, and that is 27.5% of your annual income. and your tax rate is 41%, then at the end of the year, when you do your tax returns, out of that 100,000 Rand, SARS will give 41,000 Rand back to you and say, thank you for being a good citizen, making provision for your own pension fund. Here you go. You can do with that money as you please. So if you then reinvest that 41,000 Rand, you've effectively invested 141,000 Rand for the year, plus the growth. Let's say you got 10% growth on just 100,000 Rand, that's 10,000 Rand. So in 1 year, you've gone from 100,000 Rand to 151,000 Rand. Not many investments that can beat that. So that's the one thing that I wanted to say to you. If you do contribute more than 27.5%, be that on the monthly basis or be that as a lump sum, then you can't deduct the extra premiums. But, and this is the wonderful but, when you get to retirement and you now take your 1/3 with the 550,000 tax free, if there is any contributions you've made during your lifetime that you could not deduct from tax in a specific tax year, those premiums will now be added to your 550,000 and you will get a larger tax-free amount. Or if you have taken your 1/3 and everything was tax-free because you've taken it and there's still extra contributions, then the income that you will receive, they will calculate how much tax you would have paid, and on that income you can get a tax deduction because of that. So here's the wonderful thing. Let's imagine you've contributed to a pension fund all your life, and for some other reason you could never deduct any of the premiums, and now you sit with 6 million Rand in your retirement annuity. Because you have never been able to deduct any of the premiums, the 1/3, 2 million will be tax-free. The 4 million that gives you an income every month will be tax-free. You will have be a completely tax-free pension one day. So Charles, I know I went a bit further with regards to your question, but I hope that's something that helps, because I love retirement annuities. Let's see if there's anybody else that I missed. Okay, seems like we've got all of those. Yeah, I'm starting to get the hang of this exercise. Okay, also, there we go. Is a retirement annuity RA a good investment in the long run? Nkunzi, yes, sir. I think I've just explained it, but I'll just quickly catch up on that again. So first of all contributions that you do are tax deductible. So let's go back to the same example. You've contributed 100,000 Rand. Your personal tax rate is 41%. So that means that that SARS is going to give you 41,000 of that 100,000 Rand back and say thank you for being a good citizen and saving, so that you're not going to be using SASSA one day. Now take that 41,000 Rand. Remember, you still got 100,000 Rand in your retirement annuity. That 41,000 SARS is giving you back is what they call a rebate. So that's money back in your pocket. Take that 41,000, put it in with your 100,000 Rand. Now you've got 141,000 Rand. Plus you've got growth on that 100,000 Rand. Let's say it was 10%, 10,000 Rand. You've effectively got 100,000 that you contributed, the 41,000 that SARS gave you back that you put in, 141, plus the 10,000 Rand growth, 151,000 Rand. That means a return on investment on 100,000 Rand in 1 year of 51%. Can you think of any other investment anywhere that you can do that can give you a return on investment like this? I think it's highly unlikely. Here and there, yes, I'm sure we can find investments that are going to do it for a year or two or maybe like that, but not consistently, not year on year on year on year on year. So there you go, Nkunzi. It is definitely a good investment. Oh, what about investing in crypto? Oh, no one. Interesting name, no one. I love this thing about crypto. So when Bitcoin came into the world, my son was on my case. We have to buy Bitcoin, and I come from an older generation where we are still a bit more conservative. We first want to see if something works, so we check it out, we follow it, we wait, we decide, and so forth. And crypto followed the typical line of most alternative investments in the beginning. In the beginning, it started off, it grew fantastically quick, and then it fell fantastically quick. It grew and fell and grew and fell. And up until today, crypto is more in line with equities. So it moves up and down more like shares these days than one of these magic investments. So I like crypto. The only thing that I do not like about crypto is I do not understand yet exactly how the movements work with crypto. With shares and with stocks and with equities, we've got a pretty good idea after all these years when your pick and pay shares will go up, and when your Anglos will go up, and when your Sassels will go down, and so on. So we can predict it a bit better. Cryptos, I feel we can't predict better yet. But, and this is the but, there is a thing called arbitrage that makes use of the buying of crypto in US currency and then selling it in South African Rand. And that arbitrage, I see from what I have experienced and from the investigation that I have done, that seems to me a much better way to invest in crypto. Because once again, you've got somebody that has been following crypto from the start and is actually specializing in it and has found a way to invest in it and make the investment in the crypto a lot safer. So in terms of arbitrage, in terms of crypto, I like crypto, but I like it in the form of arbitrage. Once again, I will not go and try any company that puts up arbitrage and that offers arbitrage. I think one has to go and investigate a company that you trust and that you believe will do well. So we also do a bit of arbitrage, not very much, because the majority of my advisors that is with me are like me, a generation older than you guys in the 20s, and therefore we are still conservative in terms of our approach. We are pretty happy if we can get a client a good return. And when I say a good return, 9%, 10%, 11% per annum. But we can consistently do that. And we can get growth on growth on growth on growth on growth. So that's where I like crypto. I will not go and buy crypto for myself and then sell it again. That I will definitely not do. I just do not have the knowledge. And I have seen too many people get hurt because unfortunately crypto is like gold shares. People will tell you that the best thing since sliced bread is gold. You must buy into gold. You must buy into gold. Gold's doing fantastic at the moment. But wait until a few economical factors changes and then gold becomes one of the biggest heartaches that you can have. Now crypto to me at this stage is the same. It hasn't proven itself enough, in my view, to be a good, consistent investment and growth generator. Okay, so that was a bit of a long-winded exercise, but I trust that answers a bit of your question. So let's see. Babe SP, I was 55 plus on March 2021. If I don't opt in the two-pot, can I draw out all my funds as of March 2021? No. So, if you were 55 in 2021, then because you are older than the age of 55, if you wish to withdraw any of the funds that will be offered to you based on the two-pot system, then you have to opt in. And you have to tell them, I'm older than 55, I want to be part of this two-pot system. But if you are not going to be part of the two-pot system, which I encourage you, don't do it, don't do it, don't do it. If you are not part of the two-pot system, don't opt in for it. And then when you get to your actual retirement, if you were 55 then you're now about 58, 59. When you get to your actual retirement, then you will know that you've got all your money and you can exercise the normal 1/3, 2/3 options, get your tax-free portion, get a proper income, the whole tutti. So I hope that answers that question from your side. But yeah, you can never, ever, doesn't matter, you can never, ever take all your retirement annuity funds, pension funds or provident funds based on the legislation of 1/3, 2/3. And now I'm going to contradict myself just to show you how technical this gets. You can, however, take all your pension and provident fund money if you decide to resign before the age of 55 and you're willing to pay the tax. You can take all your pension, provident, retirement annuity money at the age of 55 if it's less than 147,000 Rand, I think it is. So there are technical exclusions with when you can take all your money. But it depends on the type of fund you're in, how much it is, etc. Never a good idea to take everything unless you really have very little in a retirement annuity or something. Then it's not going to have a big effect. Hope that help you, babes. Whoopsie, what did I do now? Hold on. Oh, there we go. Jojo, I'm scared to withdraw as I might resign within the year of being able to withdraw. Double tax. No, Jojo, can't be double taxed. It's absolute fallacy. Whether you withdraw or resign or retire, you either work on a withdrawal tax table or you work on a withdrawal tax table or a retirement tax table. And those tax tables are set out with specific taxes. You can't be taxed twice. It's an absolute fallacy. I've seen this question a number of times. People think that it's going to increase this or increase that. No, it doesn't. You pay straightforward the tax and that's that. Thanks, Charles. Peter Mulder. Okay, Pieter, is dit nie beter om die 1/3 in jou RA te los nie en emergency fund vir kapitaal later? So Pieter, wanneer jy opsie uitoefen vir die 1/3, 2/3, as jy sê ek gaan nie die 1/3 vat nie, dan word jou 1/3 deel van jou 2/3. So dan gee hulle nie vir jou inkomste net op die 2/3 nie, hulle gee vir jou inkomste op die volle 3/3. En jy kan nie na die tyd sê hoor, nou wil ek die 1/3 trek nie. So jy kan ongelukkig nie doen wat jy hierso voorstel of wat jy hierso vra nie. Maar wat jy kan doen, en dit is iets waarvan ek 'n baie groot voorstander is wanneer 'n mens kom by aftrede, is om te gaan kyk na jou opsies met betrekking tot inkomste natuurlik. Maar die tweede ding is om te gaan kyk na hoeveel die 1/3 is. En dan gaan doen ons 'n belastingberekening om te sien wat gaan die beste vir jou wees om te trek uit 'n belastingoogpunt uit. Volle 550,000, meer, minder, wat ook al, paar sommetjies wat gedoen kan word, en dan kan 'n mens vir 'n ou ordentlike idee gee. Maar dan kan jy of daai volle 1/3 vat, of 'n gedeelte van die 1/3. En dan gaan sit jy 'n gedeelte daarvan in 'n money market account, of 'n 7-day call account, of een van daai spaarrekeninge by die bank, waar hulle vir jou 'n redelike goeie rentekoers gee. En daai bedrag wat jy daarso gaan insit, moet so om en by 3 tot 6 maande van jou inkomste wees. So kom ons veronderstel net om sommetjies maklik te maak, jou inkomste is R10,000 'n maand. Dan moet jy tussen 30 en 60,000 rand in daai spaarrekening gaan insit, en dit is jou emergency fund. Wat ook al oor is, kom ons, die keuse wat jy daarso gaan maak, gaan weer eens bepaal word, oor jou persoonlike belastingssituasie. As jou belastingkoers 31% of hoër is, dan wil jy definitief in die life investment wees. As jy jou inkomstebelastingkoers of altyd 27% of hoër, dan wil jy in die life investment wees. As jou inkomstebelasting 27% of minder is, dan wil jy in die LISP investment wees. En dit is hoe ek iemand sal aanbeveel. Gedeelte in die bank, dis my noodfonds, res van die geld gaan in 'n life of 'n LISP belegging in, en dit is waar ek dit gaan gebruik. Kyk Pieter, lekker vraag daarso, dankie Swarrie. Pleasure in Kunzi. Nee man. There we go. Gray, my broker forecast 600,000 Rand. How is that possible on my RA? Rian, I'm not sure what you exactly mean here. My broker forecast 600,000. How's that possible, Mare? I'm not 100% sure what you mean here with what he's forecasting. Are you talking about what he's saying that your retirement annuity will be worth one day? Are you saying that's the 130 he's talking about that you can withdraw one day? Are you talking about the tax that he says that you're going to pay? Give me a bit more on this, please, Rian. Thanks. David, Harry, do you hedge? And do you have a story of how you save someone from financial collapse? So, Harry, yes, I do hedge. And when it comes to hedging, I'm talking about hedging people's risk. Because there is other hedging as well out there, especially when it comes to things like Forex and stuff like that. So do you hedge, and do you have a story of how you save someone from financial collapse? So yes, Harry, and this is basically how it goes. And it's not happened once, it's happened on a number of occasions. People tend to end up with not enough capital to retire with. So when they come to retirement, we're sitting with a situation that the income that they need and the capital needed to generate that income is 3 million rand. But they only have 2 million rand. So now we're sitting with a situation that this guy or this woman is going to run out of money. There's no two ways about it. So what do? You either have to take a lower income, you either have to take more risk with your investments, hoping that it's going to grow bigger, or you have to come up with some other combination or plan. So what I like to do, and what I've done on numerous occasions, very successful, is then to take a portion of the person's capital that is going to give them the income that they need, and to go and find the highest possible guaranteed rates that I can find, and then to go and invest that money and give them an income from that in a guaranteed income plan. And I tried this on a minimum term of 5 years, 6 years, 7 years. Then I take the rest of the capital, and then I go and play around with that capital. And what I would try and do is to say, okay, we have to take more risk with this money. There's no two ways about it. So then I go and find portfolios such as global equity funds, exchange traded funds, alternative funds, and I go and split the money there. Knowing and understanding that we are taking higher risk, but also knowing and understanding that if you take all of your money and you put it on black on a roulette table, you've got a 50-50 chance of winning. But if you take all your money and you spread it around the table, you've got a better chance at winning. So then I take that remaining money that the client needs for capital growth, and I go put that onto 3 or 4 different higher risk investments with good growth potential and good track records. And then when we get to the end of that 5, 6 or 7 years for that income where we did the guarantees for the client, then by that time, the capital that we have put away for that period of time has normally grown to a bit more than what it would have been if it stayed in the bank or was in the balance fund or whatever. And in that fashion, we managed to get the client's capital stretched out a further 2, 3, 4, 5 years so that they actually have enough into the future. And that's how I do it, Harry. Not always exactly the same, but that's pretty much what I like to do or try and do when it comes to hedging for people. Okay, debate, Harry, confusing. Hope that helps. Okay, pleasure, Jojo. Okay, and here we go again. I keep on doing this. Where is that question? 2 million retirement, donkey, Korean network. There we go. This again. If I have 3 million provenant at retirement, yet not invest it yourself, If you have 3 million provenant at retirement, why not invest it yourself and live off the interest? This again, absolutely. Anybody can do that. Anybody can do that. They can go and invest their own money, and I have no problem with that. This is my opinion with regards to that. If you are not a specialist, or if you don't do investments as a life, you don't know all the ins and outs. You don't know the technical stuff. You don't know the tech stuff. You don't know the best potential growth stuff, etc., etc. So if you don't make the right choices, it could be very detrimental. Yes, you can go and pick a fund or an investment, whatever, that is going to perform absolutely fantastic. And that's your lucky strike. And congratulations, you just hit the jackpot. But the majority of people do not have those skills and expertise. So it is better for the majority of people not to just take that money and invest it and live off the interest. Two things that you have to take into consideration here. Number one, if you withdraw the 3 million Rand Provident Fund money, you are going to be taxed excessively because you tax on withdrawal tables. Number two, you invest it in the bank and you get interest on it. Any interest over the amount of 23,400, you taxed again. So you've just taken an investment that you can manage in terms of tax, and which is, let's call it tax friendly, and you've made it all and completely taxable. So there we go, sir. That's my opinion about it. Instead of buying an annuity, trust me, if it is retirement funds, retirement annuity, pension fund, provident fund, you always rather buy an annuity. You're going to be better off in terms of income and tax. Withdrawing all the money and paying tax on it, you're going to get hammered. It's as easy as that, mate. All the best. Supposed to get 2 million Rand return, but when he worked it out again, oh, okay, now I understand what you mean, Rian, now I understand. So your previous question was about the 600,000. Supposed to get 2 million on a retirement, but when he worked it out again, he forecasted to only 1.4 million Rand. So Rian, your advisor obviously went and he used a substantially higher than advisable projection rate. And what I mean by that, and that is one of the reasons, what I'm going to tell you now is one of the reasons why insurers are not allowed to give out quotes anymore that gives projections. So when we do a calculation for a client and I project a value for you at a 9% growth rate, and I tell you your investment is going to be worth at retirement 2 million Rand if we get a 9% return on investment, then it means that if we were going to get 11 or 12%, you would have 2.4 million. But if we were going to get 6%, you would only have 1.4 million Rand, as in your case. So any projections that are done has to be done, I want to say, what's the English word? In a responsible way. And I think what's happened in your situation, and there is one insurer that unfortunately makes themselves guilty about this when you go and have a look at their policy information, but I can't name names, that they make projections, and when they give you your information, they say at a growth rate of 12%, this is going to be what you can expect. And at the growth rate of 7%, this is what you can expect. And those two values are this far apart. Now, what's happened to yours, and that's what I believe has happened, is the person doing this product for you, giving you this information, projected a very high growth for you. And I think as well that a lot of advisors do that just to try and make the sale. So here's my thing with regards to yours specifically. I think that one should go and have a look at the portfolio that you are invested in and see if one cannot change that portfolio into something better. Because if your advisor has done a projection at say 12%, which would have given you the 2 million Rand, and now you're only getting 1.4 million Rand at a 6%, maybe it's time for you to go and look at your portfolios, change it to something else. Maybe it's time for you to speak to a different advisor, mate. All the best. Sorry, no one. I'm laughing at your little comment here. If we invest lump sum into retirement annuity direct with insurance company, will it be cheaper? Yes, it will. And here's the fact of the matter. Let's say you do a retirement annuity with me and you're doing a lump sum of 100,000 Rand. I'm going to advise you with regards to what's the best retirement annuity, which portfolio you must use, whether I think everything should go into retirement annuity or it should be in others, etc., etc., etc. So I give you advice, and then I get 1% as a fee on your 100,000 rand. So I get 1,000 rand for the advice that I've given you. Now, if you go directly to the insurer and you manage to speak to a call center agent that is allowed to do something like this without any commission, because remember, every call center agent that has to assist you with a product such as this has to be either a accredited financial advisor or a financial advisor that's working under supervision. So there is a commission that's automatically accepted there. If you say to them, okay, but I don't want to pay commission, I actually am going to tell you what to do and I don't want to pay any commission, they will still do it for you. But then you will not have the advice that would have cost you 1,000 rand. So this is my thing with regards to that. Would you rather invest 100,000 rand, pay absolutely no commission and get a 7% return on your investment? Or would you rather pay 100,000 rand into investment, pay 1% commission or fee to the advisor who's helping you, and get a 9 or 10% return on investment? You might say, well, the advisor is only going to give me 2 or 3% better, or could possibly only give me 2 or 3% better. Not much, not in the short run. But over the long term, mate, I'll make you so much money in terms of investments if I help you and direct you. You will be willing to pay me 3 times as much as what you would have saved by not paying a commission. Okay, now that's yours, eh? I had a RA for 14 years, Rian. I hope you still have it. If you don't have it, I hope that you're getting a good income from that, mate. Can you briefly explain the fixed date life policy? Oh, fixed date life policy. What will happen if you outlive the date? Yes, Mark Lee. I believe what you're referring here is what we used to call a term cover policy. Also something that is very often used when you take up a bond. So a fixed date life policy is normally for bonds. So it's normally when you buy a house and you've got a 1 million rand bond and you have to have a 1 million rand life cover. And then you can choose to take out a policy for 20 years just for the term of that bond. So that in the event that you pass away, then that policy can pay out and settle your bond. So that's normally what a fixed date life policy is. And because you've set a specific time period on it, 20 years, if you get to the end of the 20 years and you did not pass away, the policy stops. The life cover is gone and that's it, over and done with. But, and here's the big but, I know everybody is, oh, that's unfair, I paid all these premiums in all these years. It's not unfair. If you have car insurance and you pay 1,000 rand a month on your car insurance, if you don't have a crash with your car or it's not stolen in a month, what happened next month? You pay another 1,000 rand. The first 1,000 rand is gone. It's over and done with. If you sell your car in 12 months' time and you buy yourself a bicycle, whatever the case might be, now you just stop paying for the insurance that you had on that car, but you didn't get anything for it. The thing is that people don't understand is that if you want to get money out of a policy, such as a fixed date life policy, and you say, no, but I at least want something back. If you were paying 1,000 rand a month for the life cover for a 20-year policy, but you said, no, I want something back, all the insurer is going to do is they're going to say, okay, now you're not paying us 1,000 rand a month, now you're paying us 1,500 rand a month, and then one day we will give you some cash back. What are they going to give you back? They're going to give you back that extra 500 rand that you paid in plus growth. They're not giving back the 1,000 rand. 1,000 rand is the risk premium. So yeah, if you outlive it, then the policy stops. Rather get yourself a life policy that is going to be for the rest of your life. And what you can do is you can choose to have an end date for the premium. So you can say, I want a life policy that's going to pay me for, doesn't matter if I turn 120 years old, but I want to stop paying the premium when I am 60 years old. That can also be done. So you will pay a bit more in the beginning. You will pay that up until the age of 60. then the premium will stop and the policy will continue. So there you go. Try that one. Okay. Interest is taxed at your marginal rate. Only the first 20. Correct, sir. That is so. I hope I didn't give you the wrong impression there. Volgende ene, waar was ons? Ek het nou iets gemis hierso. Oh, goodness gracious. Sorry, people. Okay. Dankie, David. Waardeer het. I find retirement annuity costs a drain on performance, therefore returns not good. Well, no one, then your retirement annuity is not with the right company. That's all I can tell you. Because the retirement annuity costs, the costs on RAs are not that exuberant. And if you look at the fact that the growth that you earn within the fund is also tax-free, you should not be experiencing this. If you're experiencing this, contact my company. I will put one of my advisors in touch with you. If need be, they'll help you to move the retirement annuity to a company where the where the cost is not so heavy. But it shouldn't be. The cost on any investment should never be so exorbitant that people go and say it's just not worth it. Okay, thanks Antoinette, waardeer het. Hilton, you absolutely interesting. You're a lifesaver to many people. Thanks, Hilton. Appreciate it, mate. Jojo, I have GPF as well as a preservation fund. An RA, I can draw from more than one right. Yes, Jojo, you can. But you shouldn't, Jojo. How many times must I now tell you, don't draw money from the two-part system? Don't do it, Jojo. Speak to somebody that can help you with your budget. Speak to somebody that can help you with debt review. Whatever you need to do. But try not to touch your pension fund money. I promise you. You are gonna cry when you get to retirement and you don't have an income, my dear. Please don't do it. Okay. Let's see who's next in line here. What should one consider? Re-annuity, take lifetime annuity or term amount? So with regards to annuities, the only time you can choose a term amount or a term annuity, it's called a term annuity, is if you use discretionary funds. And discretionary funds basically means your own money. So it's voluntary money. It's the money that you saved in the bank. That's the only time that you can choose a term annuity. When it comes to retirement annuity money, the life annuity that you're going to choose, the guaranteed life annuity, is always a lifelong annuity. So even though you can choose a guaranteed term and say, well, if I live for 10 years, you must pay it to me. And if I live for 50 years, you must pay it to me. But if I die within the first 3 years, then for the next 7 years, you must pay it to my wife. If you pick something like that, the life annuity, always pays for life. And living annuities is based on that percentage that you can choose depending on how well your portfolio is doing. Okay, but you can only consider a life annuity, a guaranteed life annuity, or a living annuity. And what you can do is, if you do choose a living annuity where you choose a percentage income, you can change it to a life annuity at a later stage, but you can't do the opposite. You can't go from a life annuity to a living annuity. So once again, it needs planning, it needs calculations, it needs tax calculations. Always better to speak to somebody. It will only benefit. Oh, and make sure it's somebody that actually understands this stuff. The first guy that walks into your office and says, okay, we're going to do a living annuity, that's it. Run far away. Because if they just offer you a living annuity, then they're not a financial advisor. They're just somebody selling policies. Ivan, I have an RA that matured taking the third. What will be the best for the balance? Worth about 270,000 Rand. Ivan, I am very sorry, but I cannot tell you. And I'm going to tell you what I tell a lot of people. I cannot give anybody advice based on a question like this. I need to understand what your financial situation is, your other incomes, your expenses, your assets, your liabilities. What's your family situation? Do you have underage kids? is the other financially dependent people that we have to talk to, etc., etc. So there's a lot of information that I have to look at in terms of your personal circumstances, plus your tax situation, before I can give anybody advice as to what to do. What I can tell you is basically what I told the previous person. You've got the option of a living annuity and you've got the option of a life annuity. But that's basically all I can tell you. I can't tell you which one is going to be the best, because your situation is your individual situation. And so every person's individual situation has to be determined based on their personal circumstances. Rather contact our offices. I can put one of my guys in touch with you. They can help you with the necessary calculations and we can give you advice and you can then decide from there. Okay? Okay, Rian, fantasties. Ek bly dit het gewerk. En dat dit vir jou sin maak. Wat? Oh, shit. Sorry, julle. Now I've lost myself here. Excellent answer. Dankie, dit maak sin. Best investment policies for single female, no kids, not married, leaving nothing behind for anybody. Woohoo! Flower girl, you go girl. Best investment policies for single female. Well, most important, don't invest it in your boyfriend's business, okay? That's not a good place to go. Over and above that, Flower Girl, I would say that there's basically two options that I would look at. Number one, I'll go and look at your tax situation. If your personal tax rate is less than 27%, a unit trust option. If your tax rate is higher than 27%, a life investment or endowment, as they call it. And then because you're single and you most probably got some extra money and you can take a chance here or there, go and look at an alternative investment. Arbitrage that we spoke about earlier, maybe an Apex fund, a venture capital fund, a livestock fund. There's a number of these funds that give good returns. Important thing is just before you make a decision, decide for yourself how long you're going to invest the money for, how much risk you can take, how willing are you to lose some of this money, and what do you want to save for. And those are the things that the financial advisor has to take into consideration. How much risk can you take, how long you want to invest for, and what you want to invest for, in order to give you a proper indication. But here's the thing, like I explained about the RAs earlier. If you are planning to save for your retirement and you don't have a retirement annuity, pension or provident fund, based on the tax rebates that you get, look at a retirement annuity. Can't go wrong. One of the best things out there. Okay, there we go. I also want to say after 10 years, I can see my annuity grow well. So guys, don't cancel. Thank you, David. Very true. Tell you guys one thing. I'm sitting here and I've actually got it here with me and I've actually made a video on it. And let me tell you quickly, because we are on that little comment that David has made. I have a client that actually retired a number of years ago. And when he retired, he had an amount of 132,000 Rand in his retirement annuity. And he was very upset. He was really upset because it was so little. And then I went and I had a look and I asked the insurance company to show us what he's paid in terms of premiums. And he paid in only 100 Rand a month for a number of years, paid in 28,000 Rand. And in that period that he paid in 28,000 Rand, when it came to maturity, he got 132,000 Rand out. So 104,000 Rand profit over the years. And that is because there's no tax within the fund, number one. And number two, because of the growth on growth on growth. So yes, I agree with the vet. Don't cancel it. Charles, yes. Ek het gereken, as het vanavond goed gaan, en ek kan nie glo van die tyd gegaan het nie, dan moet ek het dalk elke dinsdag aandoen. Ek het een of twee vriende wat ek miskien ook kan kry om saam een of twee van hierdie goeders te doen. Maar ek het dit so geniet, ek weet nie of ek dit gaan share nie, so ek dink volgende week Dinsdag aan, dan doen ons dit weer, 6 tot 7, hoe klink dit vir jou? Okay, MK, I'm going on retirement, whoops, here we go, I lost it again. How did I do that? I'm going on retirement next year, April. Will be 60 in January. I will get 1.1 million after tax. Fantastic. MK, great. I hope it's going to be enough. Oh, you see, you don't even need it. Even better. Yo. Oh, gee. MK, I think you just joined too late. I just gave Yvonne the same answer I'm going to give you. The wonderful thing is, number one, you don't need the money. Okay, so you've got a lot of different options. But in terms of which option is going to work best for you, I need to understand what your income and expenses situation is, assets and liabilities, beneficiaries, financially dependents, when you're going to need the money, how much income you're going to need from it, etc., before I can give you advice. It will be absolutely irresponsible from me to, based on this little question that you have here, to give you advice. So contact me and I can set up a thing with you. But the one thing I do know is, based on what you are getting, you're most probably in a medium to high income bracket, and therefore it would most probably be better for you to go into a life investment, the endowment that I keep on talking about. But once again, if you don't need the money, it also means that you are financially well established. So I feel that personally, you have a lot of options, because you can actually play around with a bit of the money. You can actually take chances, and with small portions, not with everything, with small portions, and give yourself a boost. So I think you've got a lot of options. I don't think you should limit yourself just to one product. But give us a call, MK. Let's see if we can help you, mate. Pleasure, Yvonne. Never, flower girl, never. Yeah, don't give it to your boyfriend. Working for the government. MK, you shouldn't have said that, mate. The moment you said you're working for the government, everybody's going to take you out. They're going to think you're one of those that committed fraud. Give me a call. I'll gladly set up an appointment with you, myself or one of my advisors. But will it be beneficial to add extra money to my RA or invest? And why do I keep on doing this? Will it be beneficial to add extra to my RA or invest? I have an extra amount monthly to put away. But whether it will be beneficial to put it towards your retirement annuity will all depend on what you are currently contributing towards your RA or your pension fund. If you are not up to the 27.5% limit, then absolutely, it could be of a great benefit for you. But it also depends on your age. How old are you? Do you have any other emergency funds that you can draw on if you need it? Do you have other investments that you can fall back on if needed? Because if everything is tied up in a retirement annuity, and you are 35 years old, and then next year you lose your job or whatever, and suddenly you don't have money and everything sits on the RA, it's also not lekker. So when it comes to investments, it's not only good to diversify your investment in terms of the risk that you're going to take and making sure that you spread your investment. It's also important to make sure that your investment addresses everything: retirement, liquidity, emergency, growth. So all of those things has to be taken into consideration. So the short answer is, if you're not contributing 27.5%, yes, it will be beneficial. Whether it is the right place to go and invest it, that will depend on your personal situation. That's where you need a bit of a planning session, where you talk to somebody, or you just decide for yourself. Can I afford to have everything tied up, or must I have some of the funds liquid? Okay, Bart, I hope that helps, mate. When is the best time to pay extra money on your bond? Anytime. If you've got a few bucks extra, go and pay it in. Have a look at what your bond rate is. And this is normally how I explain it to people. if your bond rate is, let's call it 10.5%, and you put an extra 100 Rand per month into your bond, you are getting an effective 10.5% return on investment, because that interest of 10.5% you don't have to pay. So I think whenever somebody's got extra money, they must put it into their bond and pay off their bonds quicker. But at the same time, I know that people are not always financially disciplined, and I had to basically insist on a number of clients during my lifetime that they rather put it onto RAs or endowments or unit trust investments, because they just couldn't commit to putting the money into the bond. So it takes financial discipline. But any amount, whenever you can, put it in there. Flower Girl, I have an RA and pension fund, maybe another pension fund, always want access to my money. RA does not allow access. Yes, Flower Girl, so in your case, with regards to your question from earlier, then in your case, you most probably will have to start looking at endowment or unit trust, because a lot of your money is already in pension funds and RAs, which you can't touch until retirement age. Okay, Flower Girl, we will do it again next week, Tuesday, like I said. MK, hi. Hey, we're at 7 o'clock. Okay, let's see if I can answer one or two more, and then I'm going. Let's see. We'll do so. Yes, yes, yes. Thank you, JMF. Yes, yeah, I like it when people help out. People with more knowledge. Thank you, Charles. Appreciate it. Pleasure, Bart. Okay, everybody. That was it. My hour is up. I really enjoyed talking to all of you. Please, in my profile is my WhatsApp number. My website, go and visit it. We've just revamped it and I'm pretty proud of it. Looks good. There's still a few things, but yeah, contact us and we will gladly assist if we can. If it's not me personally, it's one of my advisors, but we will communicate with you. Trust me. Have a wonderful evening, everybody. Keep well. Bye bye.